And there you have it, the closing bell at the New York Stock Exchange, signaling the end to another trading day on Wall Street. It was not the strongest day for the U.S. stock market. The Dow Jones fell about 170 points. The S&P and NASDAQ also ended the day in negative territory. The S&P dropped around 1%, the NASDAQ around 1.5%. Joining us now is David Kelly. He's the Chief Global Strategist for J.P. Morgan Asset Management. David, welcome. Great to have you with us. So the U.S. Labor Department reported today first-time unemployment claims fell for the fifth straight week last week. So what do you think is behind this unfaltering strength of the U.S. labor market in recent months?
Well, I think there's just been this pent-up demand for labor, which really stretches back to the pandemic. A lot of people retired. And we didn't have much immigration. And then as we reopened, a lot of businesses wanted to hire people. So there's a shortage of labor all over the place. And I think what that means is that companies are just very reluctant to lay off good workers. And so what we've seen is quits are rising. People are switching firms to get higher wages. But layoffs are very low. We're seeing that all over the place, including in the unemployment claims numbers this morning.
Very interesting. You did mention immigration there, because obviously that's a big, flashpoint right now. Do you see the lack of immigration, as problematic for the labor market?
Well, it has been in recent years. I mean, if you go back to the middle of the last decade, we had about 1 million immigrants or people getting immigrant visas legally coming into the United States every year. And the thing is, of those immigrants, about 70% of them, or over 70%, are of working age. They really came here to work. And then that fell in half in the second half of the last decade. And then it fell to about 250,000 over the pandemic. So really short, just at the time the baby boom is retiring in enormous numbers, immigration or legal immigration kind of dried up. And that is just exacerbating a shortage of workers all over the economy.
It's a very interesting perspective that you don't often hear when the issue of, immigration comes up. I also, David, want to ask you about the Commerce Department report today showing retail sales rose 0.3% last month. Not a huge rise, but it's still somewhat surprising when you think that, inflation is still high. How is it that spending also remains on the rise amid this high inflation?
Well, it is rising, but it is rising more slowly. There's a lot of volatility in the month-to-month numbers, but we're tracking this on a quarterly basis, and each quarter consumer spending is growing a little bit more slowly. So I wouldn't be, I think we could get misled by a rise in retail sales. I think overall consumer spending growth is slowing down because we've seen an end to fiscal stimulus. We've got obviously problems in the housing market now. And we've got a very high dollar. So the economy is slowing down. It's just that there's still this shortage of workers.
And David, what do you expect will happen then at next week's highly anticipated Federal Reserve meeting? I mean, I know everyone wants to know, exactly what's going to happen. But do you think the two reports that we've just discussed might have any impact?
I don't think so. I think that overall the Federal Reserve will raise rates by 0.75%, which is a lot. But what I think has happened is between these reports and also the CPI report earlier on this week, the Federal Reserve is still nervous about inflation. Now, I think inflation's coming down, but they're very impatient here. And so while I think they may raise rates by 0.75% this week, unfortunately, that's not the end of it. We expect to see further significant rate increases before the end of this year. So I think we will see, higher interest rates across the economy before they're done.
So in your view, should the Fed slow down a little bit and sort of wait for things to even out? As you said, inflation is starting to come down a little bit. Do you think the Fed should just, put the brakes on a bit?
Yeah, I do. I mean, it took 8 years for the unemployment rate to come down from 10% to 4%. And the Fed took their time getting down to a normal unemployment rate. Inflation is going to fall. By 2024, I expect the inflation rate will be back down at 2%. The Fed's in a hurry to get it there. But the danger is they could put the economy into recession in their anxiety to get inflation down faster. It's going to fall anyway, but they should be just a little bit patient here.
Yeah, everyone is talking about that soft landing, right, that the Fed is trying to achieve. All right, well, David Kelly, thank you so much for your insight. We really appreciate it.
Anytime.